7 lessons from the 2017 crypto bull market and how you can get ready for the next bull run. Now, the 2017 crypto bull run seems so far away, but it was not long ago that the price of Bitcoin reached an all-time high of around $19,500 on the 17th of December 2017. So in this video, I will share my top 7 lessons from the 2017 crypto bull run, what I learned, and so on. So as someone who got into the crypto space in 2015, I must say that 2017 bull run was one of the most unreal experiences I've ever experienced. And I don't think it will be the last. So if you've bought Bitcoin or other cryptocurrencies in the last year, or you're planning to buy some Bitcoin or cryptocurrencies soon, then this video is for you. So make sure to watch till the end, as these 7 lessons will help you make the most out of your investment during the next bull run. So let's get started. Lesson number 1. Now, it does not matter how smart or experienced or educated you are. Timing is everything. So the crypto market is super rational. First of all, it's due to the low market capitalization, due to manipulation, and due to a lot of speculation. And that's why you need to think about how long you would like to keep your cryptocurrency, what kind of investment plan you want to have. Now, most people that held Bitcoin for over a year did very well. So apparently there are only 70 days, if you look from today's date, that Bitcoin has been unprofitable to buy. That means that if you've bought Bitcoin at any random point in time, there's a 98.17% chance that you're profitable. So therefore, my suggestion is buy, forget, and ignore the small price fluctuations. So if you've bought Bitcoin for example, on the 8th of September 2017, and you held it until today, then you'd have doubled your money. But hindsight is 2020. It's always easy. Now, long-term holding is, in my opinion, the key to lower taxes and greater wealth. Lesson number 2. Hype is your enemy. So we are all human, and as such, we have certain predictable emotions: greed, fear, uncertainty, doubt, and these emotions get multiplied as soon as there's money on the table. Now, one of our predictable behaviors is, for example, being vulnerable to storytelling hype. So it could be the fear of missing out on a huge opportunity and people telling that they have found some riches by buying a coin. So I remember really well the feelings that bubbled inside of me when I heard about a new promising ICO during 2017, or read about this hidden gem, incredible team, super great advisor, and blah, 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 blah. Now, maybe you've heard of similar experiences, you read about it on Reddit, and yeah, this feeling of missing out was so great, it prevented me from thinking rationally. Now, I wanted to buy this coin or that coin as fast as possible, dropping everything else I was doing, and very often it didn't end well. I had big losses. So very often these projects had massive pre-sale discounts, fluffy games, paid reviews, and so on. So after being burnt once and losing my initial investment, I learned to look through this hype and think a lot more before investing. Lesson number 3. Now, if the creator of a project decides to sell or donate his or her coins, then you maybe should think probably of doing the same. And the reason I'm saying that is, you might remember well, at the end of 2017, Charlie Lee, the founder of Litecoin, he announced that he had sold all of his position. Now, why selling doesn't really matter. It might be for personal reasons, it doesn't matter. So I think it's just really important to be extremely cautious when founders decide to sell all of the tokens, and maybe also think about also exiting your position, especially if this is public information. Now, as a side note, in the stock market, the investing firm Berkshire Hathaway held a record $122 billion in cash in June 2019. So this cash holding is worth nearly 60% of its portfolio of public companies, the largest proportion since before the last financial crisis. So is this also a sign that they are scared about our next financial crisis? You be the judge. Now, lesson number 4. You have to be very careful about all YouTubers and bloggers that speculate about which coin to watch or which coin to buy next month or next year. Very often, YouTubers and bloggers don't tell you if they paid or promoted a special project and so on, or they got compensation. Now, I want to be as authentic as possible and always tell you it's something sponsored if I've been paid to bring a project to you. And keep in mind that when you see someone hyping a project, they might have big amounts invested. So lesson number 5, do not attempt to day trade. And I have to repeat this again, do not day trade unless you're very experienced in trading, and this will only give you more sleepless nights and anxiety and a lot of stress, and you probably lose your investment. Now, do not trade high leverage if you don't want to end up on the wrecked BitMEX Twitter account. And me personally, I'm starting to think that 50x or 100x margin trading on BitMEX is like playing a Russian roulette with 2-barrel shotguns using 2 shells. Mindless. So, and if you decide to trade, then only with a very small percentage of your portfolio. So something like 5%, or long-term holding is much more profitable for the long run for most investors. Lesson number 6. So very important, don't count your chickens before they hatch. So in other words, you don't profit until you have cashed out. So one bittersweet memory I had during the last bull market was when I participated in ICO, and it was called Car Vertical. And remember, I bought the coins, I participated in ICO, and my $2,000 investment turned into $35,000. So I was super happy, euphoric, and furthermore, I truly believed that the price would go even higher, so I didn't sell. So then when the price dropped back down and my investment went to $23,000, I was not so happy, and I also didn't sell because I thought, all right, the investment will go much higher. And yeah, I already started regretting not selling at $35,000. And in the end, I'm lucky I managed to break even. And yeah, my fear of missing out caused me not to get the profit I had. So a good rule of thumb is to set some sell orders at various price points so that you can take out your initial investment and a little bit more if you're lucky. But me personally, these 3 points are super important advice. So first of all, always take out your initial investment when it goes up. Dollar cost average sell to get the highest average selling price, and profit is profit. Don't fret about the price going much higher after you've sold. If you made a profit, you're better than most people in the market. Lesson number 7, last but not least, remember that you should not invest more than you're willing to lose. I know many people are talking about that, but it's super important. Do not take out any loans to invest in this market. There have been quite a few examples on Reddit where people have lost everything, and now they need to pay back a huge loan over the next 10 years, for example. So yeah, I'm super looking forward to the next bull market, and me personally, I think it will be around 2021. I look at the 4-year cycle. So hopefully you can use these tips to make the most profit as possible with the least risk. Now, if you enjoyed this type of video and you want to see me cover similar topics, then I'd appreciate a subscription, and don't forget to click that notification bell to stay up to date. Thanks for watching, and I'll see you on the next one.